Among the thousands of digital assets that have come and gone, only a handful consistently maintain relevance across cycles. In the current landscape, 3 projects stand out as particularly important for anyone interested in long-term blockchain adoption and institutional use: XRP, XLM, Stellar, and XDC Network. Each of these cryptocurrencies has not only survived but also carved out a distinctive identity in the broader market. While they often attract different communities and institutional partners, they share overlapping narratives of utility, remittance, tokenization, and trade finance. More importantly, all 3 have shown resilience in the aftermath of one of the darkest chapters in crypto history: the collapse of FTX in November 2022. Before we examine their trajectories, it's important to make something clear. This is not financial advice. The crypto markets are inherently volatile, and the performance of any coin, even one with strong fundamentals, can never be guaranteed. Entire fortunes have been made and lost in a matter of weeks. The insights presented here are intended for informational and educational purposes, offering a detailed comparison of XRP, XLM, and XDC as they currently stand in the ongoing cycle. Another key point is bias. Many in the crypto space are maxis, staunch believers that their coin of choice will inevitably dominate the future. XRP has perhaps the most visible of these maximalist communities, but Stellar and XINFIN also have dedicated supporters who highlight the uniqueness of each project. In truth, no analysis is entirely free of perspective, but in this deep dive we'll strive to present each project as objectively as possible, relying on facts, recorded performance, and verifiable partnerships rather than hype. With that foundation set, let's start with performance since the FTX bottom, arguably the most important reference point for this cycle. When FTX collapsed in November 2022, it sent shockwaves through the entire cryptocurrency ecosystem. Billions of dollars in value evaporated almost overnight, confidence was shaken, and retail participation hit some of the lowest levels since the previous bear market. Yet, as with every downturn in crypto, certain projects demonstrated resilience, bouncing back stronger than others. XRP, XLM, and XDC were among these survivors. XRP's recovery, from 36 cents to $2.89. Starting with XRP, its rebound has been particularly remarkable. At the bottom of the market, XRP was trading around 36 cents. From there, it surged to $2.89, representing a 705% gain. This type of performance is extraordinary not just in traditional finance but even in crypto, where triple-digit gains are common during bull runs. A number of factors contributed to XRP's outperformance. First and foremost was its regulatory clarity following years of legal battles with the U.S. Securities and Exchange Commission, SEC. The resolution of the case lifted a massive cloud of uncertainty that had suppressed its price for much of the previous cycle. Investors who had been hesitant to touch XRP due to the ongoing lawsuit suddenly saw it as one of the few legally greenlit digital assets in the U.S., sparking renewed demand. Additionally, XRP benefited from being a large-cap cryptocurrency. In every cycle, the largest projects tend to move first. Capital initially flows into Bitcoin, then Ethereum, and then into major large-cap altcoins. XRP, with its long-standing position among the top assets by market capitalization, was a natural beneficiary of this rotation. Finally, ETF momentum provided an extra tailwind. With Bitcoin ETFs proving that institutional capital could be unlocked through traditional vehicles, speculation grew that other large-cap cryptocurrencies like XRP could eventually follow suit. Even if this was not immediately realized, the narrative itself was enough to bring in speculative inflows. XLM's steady climb, up 460%. Moving on to XLM, Stellar. The performance since November 2022 has been solid, if slightly less explosive than XRP's. From its lows, XLM is up roughly 460%. While it didn't match XRP's headline-grabbing percentage, it still significantly outperformed the broader altcoin market during the same period. XLM's rise can be attributed to its quiet but effective expansion into remittances and real-world partnerships. Unlike XRP, which commands a large amount of media attention, Stellar has taken a more understated approach. Its collaborations with MoneyGram, integration of USDC on its network, and connections with major payment networks like Visa all helped cement its reputation as a blockchain for real-world financial infrastructure. Moreover, in the past week alone, XLM doubled in price, briefly outpacing XRP in short-term performance. This surprised many market participants, particularly XRP holders who had assumed their asset would always lead. Stellar's breakout underscored an important lesson. Even in a market where assets often move in tandem, there are moments when smaller large caps can outperform giants. XDC's progress, up 270%. Finally, there's XDC Network. Compared to XRP and XLM, its performance since the FTX bottom has been more modest, with gains of around 270%. While this trails behind the other two, it's still a significant achievement considering the broader environment. XDC is unique in that it doesn't chase mainstream narratives as aggressively as other projects. Instead, it has remained focused on a very specific niche, digitizing trade finance. While this sector is less familiar to retail investors, it is enormous in size and importance. By focusing on building infrastructure for institutions, banks, and trade organizations, XDC positions itself as a long-term player in a trillion-dollar market. It's also worth noting that XDC's current performance reflects its stage in the cycle. As a lower-cap asset compared to XRP and XLM, it tends to lag behind in the early phases of bull markets. Historically, momentum starts at the top, Bitcoin, Ethereum, large caps, and trickles down to mid-caps and low caps. If this pattern holds, XDC may still be in its accumulation range, waiting for the right moment to break out in a bigger way. The key takeaway here is that all three, XRP, XLM, and XDC, outperformed the broader crypto market since November 2022. While many altcoins stagnated or posted only modest gains, these projects saw triple and even quadruple-digit growth. Part of this comes from their strong use cases and institutional backing, but another factor is survivorship. In a market flooded with tens of thousands of tokens, most of which trend to zero, projects with real partnerships and adoption naturally rise to the top. At this stage of the cycle, XRP is leading due to legal clarity and institutional excitement. XLM is quietly catching up with strong partnerships, and XDC remains the underdog with massive potential if trade finance digitization takes off. One of the most useful ways to understand where we are in a crypto market cycle is to look backward. Patterns may not repeat perfectly, but they often rhyme. Studying how assets performed in the previous bull run gives valuable context for what might unfold this time. When it comes to XRP, XLM, and XDC, their performance in the last cycle reveals surprising dynamics that could shape investor expectations now. The prior cycle in numbers. Let's start with the raw performance figures. XRP surged by around 1,300%. XLM, Stellar, skyrocketed by 2,300%. XDC, Network, posted a staggering 27,000% gain. These numbers, while approximations rather than precise tick-by-tick records, illustrate just how volatile and rewarding the crypto market can be when assets catch momentum. But what's more interesting is the contrast with this cycle's early phase. In the current cycle since the FTX bottom, XRP is leading the pack with a 705% gain, XLM is up 460%, and XDC trails at 270%. That's almost the exact inverse of the prior cycle, where XDC was the superstar, XLM followed, and XRP lagged relatively behind. This inversion raises a critical question. What changed? XRP, from lawsuit to leader. In the last cycle, XRP's growth of 1,300% was impressive, but it fell short of the explosive moves seen by other altcoins. Part of this underperformance was tied to the SEC lawsuit filed in December 2020, which cast a long shadow over the asset. Major exchanges delisted XRP, institutional investors stayed away, and uncertainty created a ceiling on its potential. Fast forward to this cycle, and the tables have turned. With the lawsuit resolved, XRP enjoys regulatory clarity, a rare advantage in a market where most projects still operate in legal gray zones. This clarity has transformed XRP from a legally embattled token into a legitimate candidate for institutional adoption, especially in areas like ETFs, tokenized assets, and cross-border settlement. Thus, the underperformance of the last cycle may have set up XRP for outperformance this cycle. It's a classic case of pent-up demand being unleashed once the barriers are removed. XLM, the quiet overperformer. Stellar's story in the prior cycle is fascinating. Despite being overshadowed by XRP in terms of media attention, XLM quietly outperformed it with a 2,300% rally. This was unexpected for many investors, as XRP was seen as the flagship remittance token. Yet, Stellar's grassroots adoption, humanitarian use cases, and focus on peer-to-peer payments allowed it to capture momentum in ways that even its bigger cousin couldn't. For instance, Stellar was already laying the foundation for partnerships with organizations like MoneyGram and integrating stablecoins like USDC, both of which have only grown in importance since then. This ability to fly under the radar and still deliver substantial returns demonstrates Stellar's strength as a sleeper pick, one that doesn't always dominate headlines but consistently delivers results. The big question is whether Stellar can repeat that quiet outperformance this time. Already, in the short term, we've seen moments where XLM has outpaced XRP, for example, its recent 2x move in a single week. While history doesn't guarantee the future, XLM's track record of surprising investors makes it a contender to watch closely. XDC, the once-in-a-cycle moonshot. No discussion of the prior cycle would be complete without XDC's jaw-dropping 27,000% gain. That kind of move is the stuff of legends in crypto circles, the kind of story that turns a few $100s into life-changing wealth. XDC's explosive performance can be traced to several factors. Low market cap base. Starting from a tiny valuation, even modest inflows created outsized percentage gains. Unique narrative. XDC's focus on trade finance digitization set it apart from the sea of copycat projects chasing hype trends. Institutional recognition. Endorsements from initiatives like the Trade Finance Distribution Initiative, TFD, and mentions in World Trade Organization, WTO, papers gave it credibility far beyond typical retail speculation. But this also raises a cautionary point. Can XDC replicate that kind of move again? Once an asset has already achieved such astronomical growth, repeating it becomes harder. A 27,000% rally requires perfect alignment of timing, narrative, and liquidity, conditions that rarely strike twice in exactly the same way. That said, XDC may not need another 27,000% move to be successful this cycle. Even a fraction of that growth, if paired with real-world adoption of its trade finance solutions, could cement it as one of the most valuable infrastructure tokens in the space. Why this cycle is different. While comparing numbers between cycles is useful, it's important to recognize that the market environment today is very different from the last time around. Regulation. Last cycle was defined by uncertainty. This cycle, clarity, at least for XRP, is shaping investor behavior. Institutional involvement, ETFs, tokenization, and partnerships with payment giants were theoretical in the past. Now, they are operational realities. Market maturity. In 2021, retail speculation dominated. In 2024 to 2025, institutional inflows are beginning to play a larger role. Narrative shifts. In the past, DeFi, NFTs, and memecoins absorbed capital. Now, the focus is swinging back toward utility-driven projects like XRP, XLM, and XDC. This shift means that while historical patterns give us hints, we cannot assume that the same coin will dominate simply because it did before. Instead, we must evaluate them in light of the new macro and regulatory realities. One of the clearest lessons from comparing past and present is the importance of diversification. In the prior cycle, investors who bet only on XRP missed out on XLM's outperformance or XDC's moonshot. In this cycle, it may again prove unwise to put all one's capital into a single project. Even though these assets often move in tandem due to broader market trends, their individual catalysts, legal clarity for XRP, remittance partnerships for XLM, trade finance digitization for XDC, can cause bursts of differentiated performance. For all the optimism surrounding XRP, XLM, and XDC, it's critical to balance the bullish narrative with a sober look at the risks. Every investment carries uncertainties, and crypto, volatile, fast-moving, and often unpredictable, is no exception. While these three assets have strong use cases, institutional traction, and past performance to back them up, they also face challenges that could shape their trajectory in this cycle and beyond. Regulatory uncertainty. Yes, XRP has achieved a rare degree of clarity after the lawsuit against Ripple concluded. But the same cannot be said for XLM and XDC. Both operate in sectors, remittances, and trade finance that intersect with global regulatory frameworks, from anti-money laundering, AML, compliance to securities classifications. XLM faces risks as it continues to expand partnerships with payment providers like MoneyGram and integrate stablecoins such as USDC. While this makes Stellar a powerful remittance and aid delivery platform, it also places the network under heightened scrutiny from regulators across multiple jurisdictions. XDC, despite its institutional recognition in trade finance initiatives, operates in a highly regulated environment involving international banking standards and compliance frameworks. Any misalignment between blockchain-based solutions and regulatory requirements could slow adoption or limit scalability. Even XRP, with its clarity in the US, must still navigate how regulators in other regions view its role in settlement and tokenization. Global adoption is never uniform, and inconsistencies between jurisdictions could present obstacles. Competition. Another major challenge is the competitive landscape. For XRP and XLM, competition from both traditional financial systems, like SWIFT or Visa's existing rails, and emerging blockchain networks is fierce. The rise of central bank digital currencies, CBDCs, for instance, could reduce the demand for private blockchain solutions if governments decide to rely on state-backed infrastructure instead of third-party tokens. For XDC, while it is uniquely positioned in trade finance, it is not the only player. Other blockchain consortia, such as R3's Corda and Hyperledger, are also pushing into this domain. While XDC may have a first-mover advantage, incumbents with deeper connections to banks and regulators could erode its market share over time. The risk is that, in chasing institutional adoption, these networks could find themselves competing not just with each other but with entire legacy systems and government-backed projects. Adoption speed. Crypto markets move fast, but institutional adoption often moves slowly. This mismatch can frustrate investors. XRP's partnerships with banks and remittance providers are promising, but widespread replacement of SWIFT or large-scale adoption of Ripple's ODL system is unlikely to happen overnight. Stellar's focus on humanitarian aid and retail remittances is powerful in theory, but those markets evolve gradually. Many aid organizations, for instance, still rely heavily on traditional financial infrastructure, and shifting them to blockchain rails will take years of pilot projects, education, and technical integration. XDC's digitization of trade finance is arguably the slowest moving of all, since trade finance involves multiple layers of stakeholders, international agreements, and highly conservative institutions. Even if blockchain solutions prove efficient, adoption timelines could stretch far beyond retail investor patience. This gap between market hype and real-world implementation creates risk. Prices may surge ahead of adoption, only to correct when investors realize progress is slower than expected. Market cyclicality. We have highlighted how dramatically performance can vary between cycles. XRP lagged in the prior cycle but now leads. XLM once outperformed quietly, and XDC delivered an outlier move. The reality is that crypto markets are cyclical, and no coin stays on top forever. As Bitcoin dominance fluctuates, capital flows from majors to mid-caps to low-caps. Timing these flows is notoriously difficult, and being early or late can lead to missed gains or painful drawdowns. Even strong projects with clear use cases are not immune to these cyclical patterns. For example, if Bitcoin continues to dominate, altcoins like XLM and XDC may remain suppressed longer than expected. If the altcoin cycle comes later than anticipated, investors could face months, or even years, of sideways price action before momentum resumes. Narrative risks. Each of these cryptocurrencies relies on a narrative to drive adoption and investment. XRP is the institutional settlement layer. XLM is the peer-to-peer remittance and humanitarian aid solution. XDC is the trade finance digitization leader. But narratives are fragile. If public perception shifts, whether due to failed partnerships, delays in adoption, or competition, confidence can evaporate quickly. In crypto, narratives often drive price as much as fundamentals, so any disruption in storylines could impact performance even if the technology remains sound. Liquidity and market manipulation. While XRP and XLM have relatively deep liquidity due to their larger market caps, XDC still operates in a thinner market environment. This creates the possibility of sharp volatility, manipulation, or whale-driven price moves. Investors in XDC especially must be prepared for sudden swings that may not reflect underlying fundamentals. Even XRP and XLM are not immune. Despite their size, both can experience large swings driven by speculative trading, leverage in futures markets, or sudden shifts in retail sentiment. Investor psychology. Finally, one of the most overlooked risks is human behavior. Investors in crypto often chase momentum, sell too early, or hold too long. The transcript highlighted how investors were shocked when XLM outperformed XRP in a single week. These surprises are common in crypto, and they can trigger emotional decisions that impact portfolios just as much as external risks. At the end of the day, the conversation around XRP, XLM, and XDC boils down to more than just speculation. These aren't meme tokens or passing fads. They are part of a broader shift in how money moves, how value is settled, and how global finance adapts to the digital age. XRP has already proven resilience through its battle with regulators, and its recognition as a legally distinct asset in the US has positioned it as the leading candidate for institutional settlement. It is the coin that survived the storm and came out stronger. XLM has shown time and again that quiet execution matters. From powering humanitarian aid delivery to bridging retail remittances, Stellar continues to build in ways that matter to real people. While it may not always dominate headlines, its steady role in expanding access to financial services cannot be underestimated. XDC remains the dark horse, less talked about, less flashy, but strategically positioned in the trillion-dollar world of trade finance. For long-term investors who understand how slowly but surely institutions move, XDC represents a unique opportunity to be early to a niche that could become mainstream in the next decade. But here's the key. No single asset is guaranteed to win it all. Cycles shift, leaders rotate, and narratives evolve. The winners of one cycle may lag in the next, and vice versa. That's why a thoughtful approach, grounded in research, patience, and diversification, is critical. Crypto isn't just about chasing green candles. It's about understanding the underlying use case, the adoption curve, and the broader economic forces shaping demand. Whether it's XRP's settlement layer, XLM's role in remittances and aid, or XDC's push into trade finance, each of these projects carries potential that extends far beyond short-term price action. The risks are real: regulation, competition, adoption speed, and investor psychology all play major roles in shaping outcomes. But the opportunities are just as real. For those who can balance conviction with caution, this moment in crypto may well be remembered as the turning point when blockchain moved from the fringes into the foundation of global finance. Now the question comes back to you. Are you paying attention? Or are you going to look back years from now wishing you hadn't slept on this? If you've made it this far, you already know what's at stake. The playbook is being rewritten in real time, and those who take the time to understand it today will be the ones positioned for tomorrow's rewards. So, take the research seriously. Watch the adoption trends closely. Stay level-headed in the face of hype. And most importantly, don't ignore the quiet moves happening beneath the noise. Because whether it's XRP, XLM, or XDC, history shows the biggest shifts rarely announce themselves with fireworks. They happen quietly and then all at once. Stay informed, stay prepared, and remember, in this market, fortune doesn't just favor the bold, it favors the informed.